Good morning, Mario Singh.
Hi, Prem.
Hi, very nice to meet you today, and thank you for joining us on Kini TV.
Thank you for having me.
Thanks. Mario, I can call you Mario?
Sure.
You are a Forex expert. You're very well known in terms of Forex and Forex trading. And you are the CEO of Fullerton Markets, which is a New Zealand-based company, but you are based out of Singapore with a team of 50 people. That's great. Great to have you here today. So Mario, Forex is very well known. And as a trader, can you give us the big picture here, right? What is Forex trading about, and how do you do Forex trading to make a buck out of it?
Fantastic question, Prem. So here's the thing, right? Forex is basically trading on currencies. It's as simple as that. It's basically trading one currency over another currency. So let me give you one prime example. The most traded currency pair in the world is basically the euro versus the US dollar. Today, that rate is about, say, 1.13. So essentially, 1 euro equals to 1.13 US dollars.
Yes.
Now, how do we make money? Just simply 2 points. Number one is that when the rate goes up from 1.13 to say 1.15, and if you click a buy, you're basically making money. That means prices are rising. The beautiful part about Forex is that even when prices drop from 1.13 to say 1.07, if you had clicked sell, you still make money. And this is the beautiful part about the Forex market, that people can make money basically either way.
But it obviously can go the other way, right? I mean, you could also lose money on Forex. So what strategies does one need to know before going into Forex trading?
All right. Now, basically for me, when I teach Forex all over the world, I essentially tell people that you need to get a good grasp on three things. I call it the 3 laws of successful trading. So essentially, law number 1 is basically strategy. You got to know at any point of time, should you buy or sell or stay out. But many people think strategy is the be-all and the end-all. That's not true. Strategy is important, but 2 other things are more important. Law number 2 is actually money management. How do you control your risk in the market? And number 3 is basically called the trader psychology, which tends to trip people up. You've got to manage your own psychology in terms of fear, greed, and hope.
Right. Okay, that's great 3 strategies, right? But if I want to enter the market, I'm not an expert in Forex. Everybody's saying, oh, the currency is going to go up, it's going to go down. Anything can happen, right? So how does one learn Forex quickly and get it right, to maximize, the return, but maybe minimize risk?
Sure.
What do you do?
Well, the first key thing, Prem, is really about education. Many people will have this impression that Forex is risky, but essentially anything comes with risk when you don't know what you're doing. Trading the stock market or literally investing in the property market is also considered risky if you don't know what you're doing. So for me, I always share with people that you need to have a grounded education. Now, what exactly does that even mean, right? Well, in trading specifically, 2 points. You either study the economics of the country or the economics of the currency, or you look at the chart and you employ something termed as technical analysis in terms of how prices are moving. Once you grasp it, it's actually not that difficult.
Right. So, some people say that, you guarantee to make money off Forex. Some people say, you give me your money, I will give you 20% return, 30% return. Is there such thing as a guarantee in Forex trading?
There's never a guarantee in basically anything. However, the markets have become so open in a sense that you can more or less predict what's going to happen. Let me give you a perfect example, Prem. So, about 2 months ago, right, there was this big hoo-ha about the UK leaving the European Union. And it did happen, and when that decision was made, when the referendum was made on the 23rd of June, to say, hey, we as a UK, as a country, we are leaving the EU. And when that happened, the British pound literally plummeted. So that's one specific strategy that all our audience can actually employ. If you follow the news close enough, and if you take action, chances are you are able to make good money in the Forex market.
But, with the Brexit, the vote could have been the other way. So you had betted that, Britain would leave Europe, and it decided against it, you probably make a loss on your trade.
Not exactly. Let me explain. This is a great point right now. So in trading, one key statement that I always share with people is that you never predict, you only react. What that essentially means is this. So I told my audience, we never really know whether they'll stay or whether they'll leave. But let's consider both sides. In the event that they will stay, the pound would most likely shoot up, in which case you should click buy. If they decide to leave, you then can click sell, and in that same particular instance, you still make money. So Prem, this is the beautiful part about Forex trading that many investors fail to see. You are able to react at any point and if you get it correctly, you still make money. Now that's one side of the equation. Let me show you the other side. Assuming you get it wrong, you must always have a place, what I term as a stop loss. And a stop loss is essentially a point that you tell yourself, hey, I'm getting the trade wrong, I'm going to cut off the trade and restart again. So you never really lose the bulk of your equity.